Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra. The last Monday of 2022, you're watching Midcap Radar, and these are the headlines that we're tracking for you. Midcap sharply outperformed larger peers amid a broad-based recovery in the market. Utilities, metals rebound, while healthcare drags.
Masgao Dock walls higher after the management tells CNBC-TV18 several high-value projects are gaining traction. They maintain revenue guidance of 25% for the current year and 20% for the next financial year.
PE investor Advent is all set to acquire Suven Pharma from the selling promoters who see this as a succession move. The move opens up the possibility of a merger with Cohance and triggers an open offer to existing shareholders. Advent International's managing partner tells CNBC-TV18 the combined entity's margins are seen around 30%.
Orient Pro Solutions surges after its US arm bags a 150 crore rupee order for the expansion of its payment services platform.
Positive commentary from Motilal Oswal gives NMDC and Canfin Homes a fillip. NMDC gains after the brokerage raises the target price on strong demand prospects, while Canfin Home gets a thumbs up for solid business momentum.
All right, those are the top headlines that we are tracking on Midcap Radar, and no Monday blues for the bulls today, right? So what a rally that we've seen after a very weak week, that is last week. Nifty is up 200 points as we speak. It has come off slightly from the highs, but there's nothing really to complain. And Midcap side of things, what an outperformer. On Friday, Midcap index turned negative for the year, but today it has actually gained momentum, and that index is up 2.5%. The advance decline ratio comfortably in the favor of advances at 6:1. Well, Reema, we don't have a lot of global cues, most of them on a holiday, lower trading volumes, but looks like at least for today we are continuing to stay at this momentum.
Absolutely, and it's the Nifty PSU banks, right? They were the ones which fell the hardest on Friday. Last week, the Nifty PSU banking index was down more than 10%, and today it's rebounded close to about 5.5%. So the harder they fell last week, the bigger the gains today. But let's track the individual movers. This is our segment, Midcap Movers. Vivek is here to take us through the midcaps that are moving around in trade. Vivek?
Well, thank you for that. Good afternoon. Now, it's a clear reversal of the trading pattern that we saw in the week gone by. The PSU banking index was the one that took the hardest knock. Pharma stocks were the ones that led the rally. And today's trade, clearly we're seeing a reversal of that particular positioning. Like you mentioned, some of the mid-cap names, mid-cap banks that we are highlighting, moving on very good volumes and a sharp rebound from the 20-25% decline that they saw the last week gone by. So J&K Bank, South Indian Bank, Union Bank, Bank of India, Yes Bank, all of these stocks surging in today's trading session. Now moving on to some of the stocks where you're seeing very strong volume activity. Cable Kiran clothing today, after a while, is moving up on very strong volumes. LJVN on the back of that order win. Some infra names today doing well, Ramkree Infra as well as HCC doing well, and Finiotex Chemicals too is up on very strong volumes. Also seeing names like Suzlon Energy, make a comeback, and Kalyan Jewellers, after the sharp knock that it took from the 52-week high, today is moving up again on very strong volumes. On the other hand, it's mainly the healthcare space, the pharma stocks that are seeing a bit of profit booking or correction. Ajanta Pharma, Vijaya Diagnostics, Thyrocare, Dr. Lal, Lupin, all of them are seeing correction in today's trading session.
Okay, that's a long list. Vivek, thank you so much for joining us and telling us which stocks are the movers in the broader markets. It's time to get a technical check on the markets. Himanshu Gupta of Globe Capital is joining us now. Himanshu, good afternoon. Thank you for joining us. Well, what's happening here? Was the market in an oversold zone on Friday? Do you expect this rally, which you've seen today, to continue?
Very good afternoon to you. Well, absolutely. The first part of this equation is that the markets were extremely oversold on Friday, and actually they closed at the very important support zones of 17,800 around in the Nifty. And today, right from the word go, we have been seeing long build-up in both the indices, Nifty and Nifty Bank. And I think the markets were so oversold and so light that once that momentum started to build up, we have seen long addition as well as short covering in most of the oversold stocks. So the way the data is turning out today, I think it has some more legs on the upside. And on Nifty, one would expect 18,100, 18,125 odd levels on the Nifty spot. I think that looks achievable by the end of day today, or maybe by tomorrow first half. Coming to Nifty Bank, I think again 42,600 is the important resistance zone, which is again 200 points above from the current levels. So I think Nifty Bank has also got some more room on the upside. But having said that, initiating fresh longs around current levels, the risk reward is not matching, not exactly in the favor. So I think a dip towards 17,940, 950 in Nifty with a stop loss below 17,900 and a dip towards 42,100, 150 on Bank Nifty spot with a stop loss below 42,000 looks to me like a good entry level from a short-term trading perspective. And mind it, 18,200 on Nifty and 42,600. These are very crucial supply zones, and as long as we are not closing above those levels, I would still say that this is just a trading bounce which one should be using to just get in and booking profits around the higher end of the zone.
Okay, this is just a trading bounce, not sustainable over a longer period. Use it to trade. Himanshu, afternoon. Individual names?
Good afternoon. Individual trades, I think MCX is one stock bouncing from a crucial support zone. The chart setup and the data is positive. So MCX is a buy for a target of 1600, stop loss below 1550. Financials looks another pocket, some strong buying seen there. M&M Finance, again a buy with a stop loss below 225, targets 238, 240 in the near term.
Okay, all right, Himanshu, thank you so much for joining us. That's a technical check on the markets. For now, we'll slip into a break. We'll be joined by Sandeep Garg, who's the MD and CEO at Welspun Enterprises, to discuss the completion of its sale of 6 key highway assets. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Welspun Enterprises recently completed the divestment of 6 road assets to Actus Highway Infrastructure for nearly 6,000 crore rupees. At a recent investor meet, the management guided for a top line of 4,000 crore rupees by FY25 and said they were focused on becoming debt-free in the long term. To discuss all of this, Sandeep Garg, the MD and CEO of Welspun Enterprises, is joining us now to discuss the prospects going ahead and the sale that the company has just seen. Mr. Garg, good afternoon. Thanks a lot for joining us. Well, that's really the first question. This stake sale that was announced earlier, now there are more updates on that. Can you give us the contours of the deal, total proceeds expected from this, the timeline by which you will be receiving this, and how will you be utilizing the proceeds that you will get?
Good afternoon, Sonal. Thanks for taking me on the show. Yeah, this deal has been in the making from June, so yes, it's taken some time to conclude. Happy to announce that the deal's first closing has taken place. So the money is in the bank. The deal value, as we say, is about 9,049 crores on a total enterprise value. Out of this, about 3,000 crores was received during the construction phase from the respective authorities. So the net asset that was on the book is about 6,000 crores is what is being sold. The part of the deal is for the debt. Debt is approximately 3,500 crores and the balance is towards the equity. Out of this balance equity, 2,039 crores, 2,339 crores are already in the bank. So the money is all come in. Now, the balance money is supposed to come in 2 tranches. One which is likely to come between now and March 23, which should happen very soon, which is subject to certain receivables being paid by the client. And the balance amount, which is majorly the BOT toll project, namely the Delhi Panipat project or Mukarba Chowk Panipat Road project, 51% equity of the same will be divested in accordance with the policy for which the approvals are still awaited, which is 1 year after the completion of the project, we are allowed to divest, and we will divest at that point in time.
So just to get it clear, the balance amount that's left is about 441 crores, right?
So it is, on the equity side, it is about 350 odd crores.
350 crore, which is left. And you're expecting it to come before March?
So we are expecting something like about 200 odd crores to come by the March, and the balance money will come by when we are allowed to transfer the 51% on the toll project.
And what is the expected timeline for that in your own assessment?
So anything between September 23 to March 24 is what is expected to come in.
Okay. Mr. Garg, you said 3,500 crore of proceeds will be used to repay debt. Can you give us a sense of what will the consolidated and standalone debt look like after this repayment?
So, Sonal, what I said was that 3,500 crores of debt will transfer as a part of this transaction. The debt in terms of the company stands at this point in time on a standalone basis at approximately 630 crores. which will be repaid out of the proceeds that we are expecting. So we will be a debt-free company in both terms of the standalone, and even on a consolidated basis, we will be a net debt negative company. So we will be in the money on both levels.
What is the consolidated debt? Net debt, you said, is 630 crore.
Yeah. So post the transaction closure in totality, the net debt position as of the current situation will be about 850 odd crores.
Okay, all right. Take that point. Mr. Garg, can you also give us a sense of what the order book position would look like after this transaction? The current order book has 46% coming in from roads, 54% coming in from water. Will that change?
So the current order book as unexecuted order book that stands is about 11,400 crores, out of which the split is 46% and 54% towards the water. So we have a very healthy order book at this point in time, which gives us a clear visibility of about 2.5 years of revenue. I think important point to note here would be that we started our journey in the road with a amount of about 800 crores on the balance sheet to develop the projects. We have made the company reach to this position that we could develop about 12,000 crores worth of road projects based on that 800 crores war chest. Now with this kind of a money, which will give us more than 2,000 crores of liquidity, we are very keen, we are very hopeful that we will be able to create enough order book as well as the developmental assets to keep the growth going.
What's the order pipeline looking like? Are we seeing a pickup in the kind of order pipeline that's there currently in terms of the tenders? We're also getting into the budget season. What's the expectation?
So at this point in time, the orders are plenty. The water segment is booming. There are a lot of projects currently as we speak in the market. So we are looking at those projects. The road is also getting a bit better. The competitive intensity is slightly better. So we expect this to stabilize, and there's enough road work to be completed going forward. So I think all in all, we believe that the orders inflow is going to be pretty good. It's a question of making sure that we pick the right orders at the right value.
Yes, so you have mentioned in your recent investor meet as well that you will focus on selective bidding for high value and margin accretive products. What kind of projects would that be? From which segment between the two, roads and water, which is margin, like which has more margins for you, and will you be focusing on a particular segment out of the two?
So water, as you know, is primarily an EPC vertical for us at this point in time. So there is a very little investment at this point in time in water. However, as road projects are concerned, it's a mix of both EPC and the HAM/toll projects. So we will continue to be a developer in the road projects. So we believe that there are enough stressed assets in the market on the road side. We also believe that with the kind of changes that are being made to the concession agreements, the competitive intensity shall remain controlled. So there'll be a lot of opportunity on the road. However, the EPC margin sector of water will continue to grow, and we will make deeper foray into it. So overall, I expect the order books to be balanced between water and road to about 50-50%.
Okay. So last question before I let you go. What is the margin outlook here? In Q2, you did 11%. We have been talking about raw material price headwind abating a little bit. What will you end the year with, and an outlook for FY24? And are you looking at any opportunities in the oil and gas space through Wellspun Natural Resources Private Limited? You spoke about 50-50% stake here, but I'm just asking, will that also be something where you will look at getting some projects?
So in terms of the margins, I expect the margins to continue to grow. Our churn rate or the revenue rate is increasing, so our overhead should be spread over the larger volumes. So I expect the margins to be better going forward. In terms of the oil and gas, happy to inform that yes, it's taken a time. We have currently two blocks which are adjoining blocks. We call them Mumbai and DSF block. So these two blocks have been found to be gas bearing with the commercial viability. So currently we are developing a field development plan of it. We believe that we have resources of approximately 800 BCF of gas, which is substantive of mid-sized gas field. So we expect that the oil and gas will start also chugging along as the road and water is now maturing.
All right, Mr. Garg, it was a pleasure speaking with you. Thank you so much for joining us today and explaining to us what this particular move means for the company and what will the PNN and balance sheet look like after the divestment of these assets as well. We'll do one thing, we'll slip into a break. Up next, we'll be focusing on Poonawalla FinCorp in our special segment Midcap Spotlight. The stock is up 11% in trade. Stay tuned.
Welcome back. Let's talk about Poonawalla FinCorp. That's rallied close to 14% after Motilal Oswal initiated a buy on the stock. In our segment, Midcap Spotlight, Abhishek is here to tell us why the brokerage is bullish on this NBFC. Abhishek?
Well, as you mentioned, Motilal Oswal has initiated coverage on Poonawalla FinCorp with a buy recommendation and a target price of 350 per share. Now, just take a look at the 350 per share is the all-time high that the company had hit. So, scalability to be direct, digital and partnership model, which is the DDP model, which is being followed by the company. So, they have partnered with various fintechs and consumer techs. So, upgrading credit rating. Remember that recently CARE has upgraded the rating on Poonawalla FinCorp, and significant improvement in liability franchise augurs well for the company. So conservative portfolio quadrals will enable best-in-class asset quality for the company. So consumer and small business finance are the segments that will be targeted by Poonawalla FinCorp. Remember that sometime back they have placed their housing portfolio to be sold. So they expect the AUM and PAT CAGR of about 37% and 65% respectively over FY22 to 25, which means they expect the ROA to improve. So they estimate ROA of about 4.8% and ROE of about 12% by FY25, which means a low leverage of just 2.5 times. Back to you.
Okay, the stock is a big mover in trade today, up 13.5%. That's about Poonawalla FinCorp. But let's move on and talk about the pharma space, because it's been a largely disappointing year for Indian pharma companies when it came to inspections by the US drug regulator. This year, in fact, we saw large companies such as Sun Pharma and Glenmark being issued import alerts, one of the severest forms of US FDA actions on the facilities. Ekta is here with more details on this one. Ekta?
Well, let's start with Glenmark. The company, which has been known for having a good track record with the US drug regulator, was issued a warning letter in 2019 for their Baddi facility in Himachal Pradesh. The issues at the facility, which manufactures creams and ointments, it seems remained unresolved as the plant was slapped with an import alert 4 months after it was re-inspected by the US drug regulator in June this year. Another case was Sun Pharma's Halol facility in Gujarat. The facility, which has the ability to manufacture complex drugs and injectables, was already in a precarious situation with the US drug regulator. Based on an inspection in December 2019, the plant was issued an official action indicated status in March 2020, implying that the US FDA can put all new approvals on hold if correction actions are not completed. They were re-inspected earlier this year only for the US drug regulator to maintain the OAI status on the plant and eventually issue an import alert at the end of the year. The US drug regulator has in the past brought up issues such as Glenmark's inability to investigate complaints of drugs manufactured in their Baddi plant to inadequate processes at Sun Pharma's Halol facility. Experts say the drug regulator's requirement for compliance can be described as a moving target, with Indian companies needing to constantly adapt, which might have lagged with the COVID-19 hiatus. For Sun Pharma, the consolidated sales impacted from Halol for the entire company is less than 3%. And for Glenmark, Baddi was only around 1 to 2% of FY22 total revenues. However, lower contribution from the facility notwithstanding, the street fears implications of the import alert, such as timelines to resolve import alerts, which can be uncertain, sometimes going into years. Approvals can in the meanwhile slow down from the US, and remediation and transfer costs can impact margins. Lastly, the street also fears system-wide compliance issues. For example, for Glenmark this year, they were also issued a warning letter for their facility in Goa and their facility in North Carolina, which was issued an OAI status. Similarly, Sun Pharma's Mohali plant, which they inherited from Ranbaxy, was issued an official action indicated status in November this year.
Clearly a tough year for the Indian pharma companies. Ekta, thank you very much for that comprehensive roundup. With that, we're out of time on Midcap Radar Inside Out. On the other side of this short commercial.